You're about to start taking RMDs and you're wondering, is this going to change my tax bracket or is it not? Well, stick around to the end of today's video because we're going to parlay that out for you today and figure out, is it going to change your tax bracket or not? So I think the logical place to start is simply, what are required minimum distributions? If you're watching this video, you probably know what that is because you've clicked on it and you're trying to learn about it. But a required minimum distribution, what that is you have money in a bucket, and that bucket you haven't paid tax on yet. So the IRS is going to look at you in basically 3 different buckets of money. You're going to have what I'm going to call tax deferred as one bucket. Then you're going to have taxable as another bucket, and then tax free as the third bucket, right? Well, for today's purpose, we're just talking about the tax deferred bucket. So what is in that bucket? What types of accounts are in that bucket? It's going to be things like IRAs or 401ks, maybe a TSP if you've worked for the government. These are employer accounts, retirement accounts that you've contributed to, and you didn't pay tax on those dollars when you put money into that bucket. And then those dollars grow over time, and whenever you kind of poke a hole in that bucket and start taking money out, that's when you got to start paying taxes. And so whether you want to or not, at the age of somewhere around 73, early to mid 70s, it depends on your date of birth, you're going to have to start taking your required minimum distribution. And so when we think about that, it's just, hey, the IRS knows you have this bucket of money that you haven't paid taxes on yet, and they are ready for you to start paying taxes. So you got to poke a hole in the bucket and start taking money out, right? And so if you don't know what bucket your money lands in, that's the first place to start. And we can help you with that. If you need help, just give us a call. We'll help you walk through, hey, this is what the statement says, so this is what it means, and this is what bucket it lands in. But the next logical thing then is, once you understand what a required minimum distribution is, then it's like, how much is that required minimum distribution gonna be, right? And so the quick math is it's gonna be 4% of whatever's in that bucket. Now that's a big round number, because it's technically based on life expectancy table. And so it's a little different for men than women, but just think somewhere around 4%, right? And so if you think about that, say you've got, 2 IRAs and a 401k. So those are all in the tax deferred bucket. And across those 3 accounts, you have $1 million. All right. Well, you have $1 million across those 3 accounts, and you're gonna have to take roughly 4% out of them once required minimum distributions start. So that's $40,000, right? 4% of $1 million is $40,000 that you're gonna have to take out. You're gonna have to pay taxes now once you start taking it, and that's gonna stack on top of the rest of your income as normal income. All right, so catch that there. It's taxed as normal income. Whatever you're making now, we're gonna talk about here in a minute, but whatever you're making now, we're gonna stack that required minimum distribution on top of it, and you're gonna pay taxes at that level. Roughly about 4% is how much you'll have to take out of those buckets of money. But then we gotta think about, do we have to take it all from each account, or can we just take it from one of those accounts in that tax deferred bucket, all right? And so the answer is simply, you don't have to take a little bit from each bucket. You can take it all from one account, or equally from each of those 3 accounts, or some money from 2 accounts and not from the third. So let's revert back to, we had 3 accounts, 2 IRAs and a 401k in that tax deferred bucket, and those 3 accounts equaled about $1 million. We think we're gonna have to take roughly $40,000 out. We can divide that equally between the 3, or we can go ahead and take the whole $40,000 from one of those accounts. So lots of different strategy there in terms of what account should I take it from. I like to think that we typically are going to tie that to how those accounts are performing or what's happening in the market, right? If one of those accounts is really high risk and the market's down a whole lot, you may not want to take that required minimum distribution from that account because you don't want to be what I call forced seller down market. You don't want to take money out the same time the market's been taking it away from you. The flip side of that is, hey, you may have an account that has performed like gangbusters, really, really well, and you can take some gain off of that, and that might work really well for you as too. So there's some strategy and some thought that we need to put into where we take those required minimum distributions from. I think one of the things that I'd start with is how much risk are in those 3 different accounts or whatever accounts you have, and then how are the returns, how are they performing, and then decide from there, should we take it equally or should we take it all from one spot? All right, now let's walk into an example and try to answer this question of, are your required minimum distributions going to change your tax bracket or not? All right, so for the example, I want to think about two different scenarios. And in those scenarios, I want each of those scenarios, the individuals married filing jointly, to make $100,000 in income. So scenario A and scenario B, both married filing jointly, both making $100,000 in income. I don't really care where that income's from. It could be Social Security pension. It could be you're still working, whatever. It's just we're making $100,000 in income. Then from there, scenario A is going to be, we don't have required minimum distributions yet. All right, we haven't reached that age. Scenario B is we're going to have that required minimum distribution. And so what we've been talking about is roughly $1 million. So if we use that 4% round figure that we can use to calculate how much required minimum distributions are going to be, that would be $40,000 for required minimum distributions. So scenario A, we're not doing RMDs yet, $100,000 of income. Scenario B, we are doing required minimum distributions, $100,000 worth of income, and then a $40,000 required minimum distribution on top. From there, we can start using the standard deduction just to keep these scenarios simple. So we'll just use a round number because it's a little different depending on your age. Let's say in scenario A and B, they have a $30,000 standard deduction. All right, so we're keeping everything the same. The only thing we're changing is that $40,000 required minimum distribution. So in scenario A, your taxable income, $100,000 minus your $30,000 deduction, $70,000 taxable income. That's going to land you in the 12% bracket, right? And then scenario B, hey, we have our $100,000, we've got $40,000 of required minimum distribution. Then we get to take $30,000 off of that for our standard deduction. Again, using round numbers, everybody's age is a little different. Your taxable income is going to be $110,000 in scenario B. And so what happens then is that bumps you into the 22% bracket. Right now, those brackets break right around that $90,000 to $100,000 mark. So we're just bumping over into that 22% bracket. And what you need to know is that it's only the dollars above and beyond the 12% bracket that are getting taxed at a higher rate. Okay, so in this scenario, your required minimum distribution absolutely changes what tax bracket you're in. And so that's where we start to change gears. And we say, if we're going to have to go to that higher tax bracket one day, does it make sense to go to those higher tax brackets sooner rather than later? And yes, maybe pay more tax today to pay a little less tax over your lifetime. I don't know. That's something that each individual has to figure out and understand if it makes sense for them or not. The other thing to think about here is also, if you're married, right? If you're single, you can just take the example we just used and cut all those numbers in half as far as the standard deduction goes and the tax rates. But if you're single, we just cut them in half. But if you're married, it's highly unlikely that you both pass away at the same time. So you're probably going to go to a single tax filer at some point in your life, hopefully a long time from now, where your tax rates could be higher too. So are RMDs going to change your tax bracket? Highly likely they are. Is that good or is that bad? That's on an individual basis that we've got to figure out. All right, so I think a couple of action items or steps that I would be thinking about if I were you and I was getting close to that required minimum distribution age. First off, I'd be looking real high level. Like, what is the percentage of my assets that is in that tax deferred bucket? Meaning, do I really even have that much money in that bucket? Are my required minimum distributions going to be that much? So that's kind of step one. Step two, how of my X amount of dollars, say $1 million, what percentage of those dollars are in that tax deferred bucket? If it's a really high percent, hey, maybe that's an issue we need to be thinking about. If it's a really low percentage, it may not even matter for you, right? Do the math, use that round 4% number. That's going to get you close to figuring out what your required minimum distribution is going to be. And then we can start thinking about whether it's going to change your tax bracket or not. If this is something that like you don't really feel comfortable with doing on your own and you're like looking for help, for someone to help you kind of do the math and figure out are required minimum distributions going to change your tax bracket or not, obviously you can reach out to us at any time. But I think it's just a simple exercise that if you spend a few minutes on, you can figure out, hey, do I need to be really thinking about required minimum distributions, or is it a small piece of my puzzle? So as always, I hope that was helpful information. If it's something you want to learn more about, we're going to continue to do more videos around tax planning. So don't forget to like and subscribe so you can get notified when we upload more videos around these retirement planning topics.